What's up, everyone? Welcome back to the weekly market recap. This week, we are witnessing something fascinating, a massive rotation happening right before our eyes in traditional markets, while crypto is going through what I'd call an institutional growing pain. But here's the thing, within the chaos, there are clear winners emerging. And if you know where to look, this bear market environment is actually setting up some incredible accumulation opportunities. So today we are going to break down the rotation from big tech into small caps and commodities, why crypto looks weak on the surface, but is actually getting stronger underneath, and the specific projects showing real relative strength, and what Coinbase earnings are telling us about the future. So let's dive in. All right. Let's start with what's happening in traditional markets because it's painting a really clear picture. So over the last 7 days, we have most equity markets in the green, but you see there is weakness in the MAX 7, while we have strength in international markets, especially emerging markets over the last 7 days. We have Coinbase 50 unchanged, and we have Ethereum up, Bitcoin up around 2%. So the overall story is that the market is not going down, and also the Dow just hit 50,000 for the first time ever. And I want to focus on small caps here because they are making new all-time highs, and especially the S&P small cap 600, which I don't have here, just have the Russell here. But the 600, which requires companies to actually have earnings, not just a good story, also just broke out to record levels. And if you look at small cap energy, it's up 25% in 2026. And we are not even halfway through Q1. So small cap materials, small cap tech, they are all ripping while everyone's focused on the MAX 7 getting destroyed. Now, also important, the dollar is collapsing. Yeah, we have multi-year lows. We have also broken this trend line here. And you know what that means. Money is rotating out of safety and into risk assets, but not the risk assets everyone owns, the stuff nobody's paying attention to. The Canadian dollar, the euro, the British pound, all breaking out. The Swiss franc just made new all-time highs. We have emerging market currencies like the Brazilian real are on fire. And this is the class up, money moving away from crowded trades, from big tech, the safe haven dollar, and into unloved, under-owned sectors like energy, materials, international markets, and small caps. And also, get this here. Where do we have it? Energy stocks, right? They are now paying double-digit dividend yields while they are going up strongly. As you're getting paid 10 to 11% annually just to hold them, and they are appreciating. And that's the kind of setup you dream about. And the takeaway here is we are in a bull market, just not in the things everyone owns. The rotation is real, it's accelerating, and it's your job to follow the money. Now, crypto is a different thing. So if I look here to Bitcoin, and let's zoom in, because there is a lot of information here. So we are at we've broken, unfortunately, through the last cycle all-time high, which is the green dashed line here. And we have the fractal again from 2022, which provides some perspective. But you see that even we had stronger, quicker downwards momentum this time than in the last bear market. We sliced through this support here, and I think that we've seen a localized low at least. Yeah, I did a LinkedIn post where I compared the distance from the 200-day moving average, and I did a set score to normalize it over the last year. And you see that we are almost 3 standard deviations below the moving average, which never happened over the last 10 years. Yeah, so we have a 0% of history, which was further below the moving average. So I think that this extreme really leads to a localized low. But what is important is that we get a recovery here. It's important that we get above this 60, 67, 68K level again. Otherwise, it really looks dark again. And also, I have a new chart here, a bubble chart. If you look at the top 100 coins of our market vector top 100 index, you see it's a sea of red. Yeah, here's the 0% return line over the last 30 days. You see it's clustered by our sectors. You see centralized finance coins getting destroyed. You see DeFi protocols bleeding. You see meme coins down 40 to 60%. BNB, one of the biggest blue chips, down over 35%. So the market is telling you something very clearly. Speculative crypto is not working right now. But, and this is crucial, weakness in price doesn't mean weakness in fundamentals. Actually, what's happening underneath is the opposite. So while retail is panicking and speculative coins are getting destroyed, institutions are building, and a few projects are showing serious relative strength in this environment. And that's where we need to focus. So for example, you have Hype Token, which I discussed 2 weeks ago, which is burning a lot of their revenue. And you also have Canton Coin, or the Canton Network, now in the headlines. And if you go to the Canton Coin, you see it has a short history here. It just got issued, but you see it has a beautiful chart, and we have a bull flag here, and we are up year to date, while you can say Bitcoin is heavily down. Now, what's the reason for that? Let me introduce you to the Canton Network if you haven't been paying attention to. So while most of crypto is down 30 to 50% over the past month, Canton's token has been showing this relative strength. And why? Because it's infrastructure that real institutions are actually using. So what is Canton? Think of it like this. Most blockchains try to do everything on one ledger. So Canton is built completely differently. It's a network of networks where these networks talk to each other and compose transactions as if they were one system, but each network could scale independently, right? So the magic is in the privacy model, not zero knowledge proofs where everything's a black box. Canton uses need to know privacy. So you see what you need to see, and regulators see what they need to see, but the whole world doesn't see your business. So who's using it? DTCC, that's $100 trillion in US securities. Nasdaq just became a super validator. We have Broadridge, Tradeweb, SBI in Japan, plus crypto native players like Copper and LayerZero. And these aren't small fish. These are the institutions that run traditional finance. And why is it performing? So the tokenomics are completely different. Yeah, and let's go to this website here. Canton has a burn and mint equilibrium. So you have to burn tokens to transact. And here's the key. 90% of the economics go to app providers and users, not to validators. And most crypto gives all the value to miners and stakers. And Canton flips that. If you build on Canton and bring users, you get the economics. And that's why you're seeing real daily fees, real usage, real institutional adoption. They're going to have US treasuries on chain this year, stable coins with privacy, actual equity trading on blockchain. And this is what adoption looks like, not speculation building. Yeah, you see here the issuance, inflation is coming down. You see the burning of the token going up because you have more transactions. And that's the ratio, the burn mint ratio. So we are currently at around 0.6. If you're going to 1, you can assume that the network is even deflationary when it comes to the token issuance, which would bring a lot of pressure if you still have high demand. Yeah. So that's definitely one coin which is which has momentum to the upside instead of downside, which is valid for most of the other crypto tokens. So another network which is in the headline is LayerZero, which is up 52% year to date. And again, LayerZero is launching their own blockchain called Zero Network. And this is massive. They're claiming 2 million transactions per second per zone, launching in fall 2026 with 3 initial zones, general EVM environment, privacy-focused payments, and a purpose-built trading venue. But what really matters, and why I included that today in the weekly, Citadel Securities is not just building, they made a strategic investment in the Zero token, and that's one of the largest market makers in the world, which is buying crypto tokens now, and that's LayerZero. Also building DTCC, again, we heard that from Canton, Google Cloud, ICE, which owns the New York Stock Exchange. And you can see the pattern, the same institutions showing up on Canton, showing up on LayerZero, and this is a coordinated infrastructure build out. So these guys are competitors in traditional finance, but they're all building on crypto rails because they see where this is going, regulated institutional grade blockchain infrastructure. So Zero won't launch until fall, as I mentioned, so we are early. But if you're thinking about accumulation targets, projects that have real institutional backing, actual utility being built, and tokenomics that reward users and builders, so these are the ones that will likely survive the bear market and could likely explode in the next bull run. So if you're asking how on earth can I capture that, that's the reason why we did the market vector token terminal fundamental index, where we use active users, fee revenues to select coins in another way. You see, for example, Tron, we have Hyperliquid again. BNB is also a protocol which burns a lot of transactions. And if we have more data on Canton and more history, I expect that Canton Network could also enter this index. So that's another way of structuring a basket than just looking at market cap. Now, another headline we had is Coinbase. Let me pull up the chart here. They had earnings and they tell an important story. Revenue came in at $1.8 billion, slightly below expectations, but honestly pretty solid given the market environment. 2 numbers jumped out. We had Coinbase custodies now 12% of all crypto globally, more than the next 4 competitors combined. So they are the institutional on-ramp, period. And secondly, They now run 12 products generating over $100 million each annually. But here's the issue. Most of those products are still tied to crypto price performance. So when Bitcoin dumps, Coinbase revenue dumps, and that's why their push into prediction markets and equity trading is so important. If they can diversify revenue streams away from pure crypto volatility, that changes the game. So the other thing to watch is as institutions build on Canton, LayerZero, and similar infrastructure, someone needs to custody those assets, and Coinbase is positioned to be that bridge. The play here is Coinbase probably has more pain if crypto continues lower, but long term, as the institutional infrastructure gets built out, they are the on-ramp everyone uses. So accumulation target at lower levels, not a chase here, but at least you see that we have, you can say, at a very nice support level here, right? Just, yeah. So it's a nice, it could be a nice entry, right, with a stop loss, but that's a short-term thinking. Longer term, as I said, Coinbase is very nice positioned here. I think I'm at the end of my story here for the week. So let's bring this home. What we're seeing is traditional markets rotating from big tech into value, commodities, small caps, international. Crypto is still getting destroyed on the surface, but institutions are building infrastructure underneath. So the strategy for 2026, don't fight the rotation in traditional markets, follow the money, energy, materials, dividend, paying value stocks, right? These are outperforming and paying you to hold them, full stop. In crypto, you still have to be selective. Most stuff is going lower, but the projects showing relative strength, Canton, LayerZero, infrastructure plays, these are your accumulation targets. And accumulate things that work in bear markets, which have real utility, institutional adoption, burn mechanisms and real fees, so not inflationary tokenomics, and projects that survive and thrive when 90% of crypto dies. Yeah. So this is not the time to be a hero. This is the time to be patient, selective, and position yourself for the next cycle. I think the best opportunities in crypto always come when price action looks terrible, but fundamentals are improving. So that's exactly where we are right now. I think next week I will focus more on Bitcoin again. But now, if you found this helpful, drop a like and subscribe. I'll be tracking these themes weekly as they develop. So stay safe out there, and I'll see you next week.